Hey guys, it's Schmitcoin here with another update for Bitcoin Magazine's video analysis. We'll be starting on the monthly time frame, working down to the weekly, the daily, and taking a peek at the 4-hour time frame. Today we're going to spend most of the analysis on the higher time frames as we draw near our monthly close in the next couple of days. And we see the market is currently testing this monthly / weekly / daily cluster of support. Keep an eye out on this horizontal here as we zoom in, because it's going to become immediately relevant. There's this green band of support, which I have outlined. You can't see why the upper boundary is where it is, but when I look at the weekly time frame, it becomes a little bit more clear. On the weekly time frame, we see a really nice swing high here, and that gives us the upper boundary for our support. Currently, this chart is not looking too hot. We still have a few more days left on our weekly candle. It closes on Sunday, but we're currently in the depths of this support level that will be tested both on the weekly and the monthly close in the next few days. When we look at the daily time frame, we see a little bit more resolution, and we can see that inside this green band of support, we have this nice blue level, which I have outlined by this swing low here on the daily. Last night, we ran a lot of stops, which I have to imagine were sitting right in this band of prices. And at the moment, there doesn't really seem to be a whole lot of buying pressure as we near the latter half of the daily candle. We're hovering above this little wick here. And if we can close above it, that'll set up a potential reversal pattern called a swing failure pattern. And all that is whenever the market comes down, it makes a new low but closes above it. That would have the market coming up and retesting this zone of prices right here, this 10K to 10.1K, however you want to look at it. That's not to be viewed as a macro reversal. Things are looking quite weak in the bull column, but maybe we'll get a nice little relief bounce and we'll reassess here. That being said, keep in mind that the daily candle for the reversal needs to close above this wick. But what I really want to talk about is the macro implications of what's going on here. If we continue to close inside this band of support, that most likely means that we're going to head to new lows. There's a lot of liquidity down here. There's a nice untested level of support, which is outlined here. And when we look back at the weekly time frame, we get a nice crisp swing high at 8,700. Although we did test the wick of this thing a couple weeks back, we never really came down and reaffirmed support here. So that's where I have my eyes drawn. There's a lot of intraday chop going on. There's a lot of traps being laid on the lower time frames. And when we look at the 4-hour time frame, it is just chop city. It's just swinging, taking out highs, taking out lows, taking out highs again, until ultimately the demand dried up and supply dominated. When we look at the volume on this sucker, we see that the breakout through this range low here was on very high volume, and it was on very high spread. And so far, the bulls have been unable to reclaim this level of support. It's looking like most likely, unless we see a strong round of buying come in, we're most likely going to close our daily right in this green level that I have outlined. And like I said, maybe we see a little bit of a relief bounce and we'll reassess if things do make it back up to 10K. But as far as I'm concerned, I have my eyes set on the 8.7 level. And that's where I will personally be looking to get long. That's where an untested level lies on a macro perspective. And when we look at our monthly time frame, it corresponds really nicely with a potential retest of this support at 9.2. So there's a lot of stuff going on here. What I really don't want to see is I don't want to see the monthly candle close below this level, because that means that ultimately, if we close below this level, that sets us up for a potential continuation, and we could even see prices as low as 7.6 by the next few monthly candles. But that remains to be seen. My immediate gaze is drawn toward this weekly level here, at this fresh weekly level I have outlined here at 8.7K. The buying pressure just looks pretty anemic. The crypto market as a whole is kind of slumping. Alts aren't really rallying. There's not a whole lot that's keeping this market up, and I think this is a logical level to test. And if this fails, well, then this will definitely get a nice firm test at 8.1. So anywhere in here is a nice buying opportunity for me. That's what I'm going to keep an eye out for. I don't really have a whole lot of interest in looking at this chop on the lower time frame, because the volume, I mean, look how consolidated this volume has gotten. It's drying up. The price spreads are growing, but the volume is low, so that means volatility is very high, slippage is very high, and the only thing that's going on in here is there's no real big money playing this right now. Big money, the smart, the quote unquote smart money, is sitting on the sidelines, and they're looking to see what happens at the retest of this low, and most likely going to see a retest of this stuff down here. So keep an eye out for this. Like I said, if we do rally, this is going to be a strong level of resistance at 10, we'll just call it 10K. And if we for whatever reason manage to rally above that, well, there's again another strong level of resistance, this whole band here between 10.6 and 10.9K, this whole stuff here, that's going to be the level to break. If we want to see a bullish bias get reclaimed, well, then we want to see this sort of price action. But for right now, it is looking, there's a strong bearish bias on the market, especially as we go into our third test of the support. You can say even fourth test if you want to call this the third. So 1, 2, 3, 4. And yeah. So keep an eye out for this level here at 8.7. If that gives way, keep an eye out for 8.2. And if we see a rally, keep an eye out for this resistance here, because if this breaks, well, then we'll have to reassess our market model now. But for the time being, it's looking like we're going to be most likely dipping to lower lows.